Hello, everyone. Welcome to AI Crypto Insights. Today is January 7th, 2026, and we're going to quickly review the market highlights in just a few minutes, all from an AI perspective. Now, just a quick reminder, this is all for educational reference only, and it's definitely not investment advice. Okay, so let's dive right in. The big story our AI models are flagging today, it all kicked off during the Asia session, where a pretty significant wave of selling pressure hit the markets and triggered broad declines right across the board.
So let's take a look at the damage. It was definitely a sea of red out there today. Let's break down how the major assets reacted.
As you can see, Bitcoin definitely led the charge downwards, but the real pain was felt in the altcoin space. More speculative assets like Penguin and Zcash took even bigger hits. The key thing to understand here is just how widespread this was. Nobody was really safe from the downward pressure.
So what kicked all of this off? What was the catalyst? Well, it all started with Bitcoin running up against a major technical hurdle.
And this number right here, $94,500, this is the key to the whole story today. You can think of it like a giant brick wall. For the third time in just 5 weeks, Bitcoin's price ran right up to it and got rejected. That failure was the spark that lit the fuse for the entire market slide.
Now, a rejection like this gets traders focused on a very particular concept, CME Gaps. If you're not familiar, these are basically price ranges that pop up over the weekend when the big CME futures markets are closed. And traders, well, they have this expectation that the price will eventually come back down or up to fill that gap.
And because of today's drop, everyone is now laser focused on where the price might go next. There are two big unfilled CME gaps on the radar that are acting like magnets. The first is sitting around $90,600, and there's an even bigger one down near $88,000.
You know the old saying, right? When Bitcoin sneezes, the altcoin market catches a cold, and boy was that true today. Absolutely no exception.
This ripple effect really slammed the most speculative corners of the market. I'm talking about meme coins and privacy coins, assets that just thrive on upward momentum. They saw some of the biggest drops. Pango, for instance, fell a sharp 6.5%, and Zcash was down 4.5%.
But here's where it gets interesting. It wasn't a total bloodbath across the board. There were a few little islands of green in that sea of red. TRX, for example, somehow managed to stay positive. And maybe even more telling, the total value locked in the DeFi sector, that's a measure of all the capital in the ecosystem, it actually went up a little bit. That suggests new money was still flowing into DeFi even as prices were dropping. Pretty fascinating.
Okay, to really get the full story of what happened today, we have to look under the hood at the derivatives market. This tells us a lot about who really got hurt in this sell-off. And the headline number is just a jaw-dropper. $465 million. That's how much worth of leveraged futures bets were totally wiped out, liquidated in just the last 24 hours. A massive flush out.
So, who was on the losing end of that? Well, for the past few days, it's been the short sellers getting squeezed. But today, the tables turned. It was all about the over-leveraged bulls. Long positions, those are bets that the price would go up, they made up the vast majority of all those liquidations.
But, and this is a huge but, here's the twist. Even with that massive wipeout of leverage positions, the total amount of money in open contracts, what traders call open interest, is still hanging out near a 2-month high. So what does that tell us? It suggests that while the really aggressive, risky bets got cleared out, a lot of traders are still holding on. Their conviction hasn't completely vanished.
All right, let's zoom out for a second. Let's step away from the daily price swings and look at the bigger picture. Because while all this was happening, the institutional momentum just keeps on building.
I mean, seriously, look at these headlines from just the past day. Morgan Stanley is filing for an Ether trust. Lloyds Bank just used tokenized deposits to buy government bonds in the UK for the first time. Barclays is putting money into a stablecoin company. The big players in traditional finance are still building, full steam ahead.
So, let's bring it all together. What's the final AI analyst conclusion? Well, it seems today's sell-off was a much-needed cleanse. It flushed out a ton of that short-term, risky leverage. But at the same time, the underlying institutional interest and the overall market structure just continue to get stronger.
So that really leaves us with the big question, doesn't it? Was this just a healthy correction, a reset before the next move up? Or is this the beginning of a much deeper slide? We'd love to hear what you think, so feel free to share your thoughts down in the comments section. We'll see you in the next episode.